Hi, everyone, and welcome back to another show. I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to look at some of the newest features in our options backtester and show you some tips on how to make the most out of the tool. We'll also answer some of the most common questions we have about backtesting. Matt, do you want to share your screen and get us started by going over our positions?
Absolutely. I think we're going to be back in the winning column after having I think one and one last week. Again, we have a lot of these way out of the money calls and puts. None of them have hit home runs yet, but they're all kind of hanging around. But last week we put two trades on in SPY, quite different. One was a long-term put diagonal. So we're selling the September of 2024, so 89 days. And then we're long the March of 2025, 271 days. So that's doing pretty well. We're up 40 cents on that. I like to look at the payout picture for it. So we are, this is one where you could kind of hang out and do okay. You have theta in your favor since we're short that front month or shorter term. I shouldn't say front month. And then you could also go over to the trade history and take a look at it, back a week, let's say. We purchased it back here and it's been kind of riding upwards. It's short delta and the stock has come down a little bit, but we're getting it on theta as well. So that's a story with that. Any questions on that trade, Tyler?
No, that looks good.
All right. And then we did this other long put diagonal that I like. This actually has long deltas. And the stock came down, but we're still making money. So the long deltas come from the short 539 put, and then we're long the 529 put. So there's some risk there, definitely, on the downside. But it's fairly significantly out of the money. And so this definitely has some theta, $14 of theta. And again, we could take a look at it in the time and sales and go back a week. And so, we basically put it on for about parity, 0, 1 or 2 cents. And then, it popped pretty soon thereafter. And then, now it got up to 50 cents and now it's around 45. So that's another good trade we got. And we found both of these from the backtester, Tyler. So what do you say we head over there?
Yeah, let's go look at it. We looked at the trade ideas tab last week, and that's where we can see trades that have we've scanned for, but that have already been backtested. So you can see the margin return and everything there.
Right. We call this backtesting best practices. So I want to take a look at some of these top trade ideas. And one of the ideas around backtesting is you don't just want to blindly trade based on a backtest. You want to go and you want to make sure that your future returns will match what we think the backtest will say they match. I don't know if that was said well or not, but you want to have a fair test that will fairly do what you think it should do in the future. So we have these put calendars. Again, these often come up. I'm sorting by Sharpe ratio, which I like to do. You can barely see the Sharpe ratio over here. 0.8s and 0.9s, those are good. Drawdowns are quite small. We like those. This is the biggest one, the iron butterfly, but also the margin returns the highest. The notional return refers to you make $10 on $100 stock, that's a 10% notional return, but the margin might only be $10 and you make $10. So the margin is just how much you need to outlay in the brokerage in order to maintain that position. So that's often much higher than the margin returns are much higher than the notional returns because you don't need to keep on that much. For example, so this is an iron butterfly. The iron butterfly, again, you're short in the middle and long the wings, and you could see a put and a put, so 50 and 60. So there's $10 of risk there, and there's $10 of risk on the upside. So let's just take a look at that trade. So the most you could lose in this trade is what you, or is the difference between the strikes less the amount you get for it. So it's almost $1 that you're only risking $1 since it's a $10 wide strike, but you're getting nearly $9. So that's a pretty good risk return.
Yeah, and that's going to be reflected in the margin return. And oftentimes we see, we get asked a lot, why does our backtester have different returns than other backtesters? Or when I'm backtesting, why does my backtest have a different return? And oftentimes we have the notional return and we're showing that, but other backtesters or your own backtest is showing the margin return. So you just have to be really careful about which return you're using and which one you're looking at in our backtester versus your own backtest.
Yeah, good point. So let's look at this. Let's look at this backtest. So you go to View Backtest Results, and so what we'll see is in the trade history, in the trade ideas, we're only showing trade ideas in backtests that have been backtested for the current environment. So in SMH, the stock price is above the 50-day SMA, and that's the only entry trigger that we tested. So you could tell in like 2016 to 2017, it wasn't above the 50. Or we didn't test in that for whatever reason. So these are times when we're testing, and you could see when they flatline, we're not testing this particular strategy. So this strategy, has done well. You'd like to look at, I go in and say, well, when didn't it do well? So it didn't kind of do well. You're at 108 and you went down to 182. And that's in September of 23-ish. So let's just go look at those trade logs. You could go back to 2023. Click on September and then scroll up a little bit because these are longer terms. I'm not seeing too many losses. So here's a loss. So here's the one that's expiring in September 23. It's only it's $2.50 wide. So this is allowing, so the strike widths allow it to lean one way or the other depending on the scan. And so this particular one was only going to lose 2.5 if it goes up, but it could lose as much as 10 minus what you receive for it. So maybe $4.39. So this is why the delta is so great. Is when you get in this, you want it to go up and through that strike. So the stock started at 156, went down to 146. So you lost money in this particular trade. So, but if you got to scroll, I like to scroll through these trades. And, it looks like the vast majority are winning, losing small, winning. I'm just kind of looking at these the green ones, and just looking at, it does look like these are kind of leaning long for the most part. So these would be long leaning strategies that we're seeing here. Now, so that's one thing that you want to do. Again, best practice, you want to be familiar with what's going on in the trades, really understand when you do well, when you didn't do well. Again, I went back to the worst month and tried to see why we didn't do well in that month. The market went down quite a bit, and you had long deltas on in that particular one. It did do well in 2020. Actually did pretty decently in the COVID crash. So that's kind of nice. 2018, it actually did okay, in those bad months too. So interesting trade. It's a 25%, 75% stop loss, 25% profit target. So pretty tight constraints on it, even though it's longer term, 75 days to expiration on average is the amount of days that you have there. But your days into trade is only 58, which is actually higher than I thought for that kind of tight profit target. So another best practice, Tyler, is to do what we've set up for you, is to look at similar backtests in regards to DTE, strike, stiff, and all that. So we'll just send that off. It's only going to find the one that we are currently looking at. But let's see what happens, for example, with different entry triggers. So we're just going to select all of these. So now you have more. The results are still pretty good. So that's nice to see. Let's look at the exit triggers. The exit triggers are, again, we have. I'm gonna take this off. I'm only gonna put like maybe 10% of the time.
So we're doing that to help reduce overfitting, right? So if you want to be real careful when doing a backtest, not to make the parameters so exact that the returns are way over exaggerated than what you're going to see in real life.
Right.
This is a way of finding backtests that are similar in their entry and exit parameters, and you can sort of see if there's any large discrepancy between the top trade or the top strategy and the worst strategy.
Exactly. So now I'm going through, and now these entry triggers is almost the exact opposite of where we are right now. So I've sorted the return on risk descendingly. So these are the worst cases, and they're still not too bad. But I mean, VIX is high and stock price is below the 200-day SMA. That's almost opposite of what we're looking at right now. So this is kind of good. So I'm getting more comfortable that this strategy does poorly in an environment that doesn't really concern us too much. And then as I scroll, VIX is moderate, RSI is moderate, so that's the middle. So this strategy does well when the VIX is low and there's not too much worry in the market, and the market's kind of higher. So I'd be inclined to take a hard look at this trade, Tyler.
Yeah, that's really interesting.
So why don't we put at least one trade on for today, and we'll do it on this. Well, let's match the triggers. As a matter of fact, let's be even lazier and go back and find the trade that this says to do. So this is the iron butterfly, just confirming that this is the one. This is one with only a profit target. So this is a similar test, but only has that profit target. I wonder if we could find the other SMH iron butterfly. Well, it looks like it disappeared, but we'll take this one. So we'll take a look at this trade. So it's same thing. You could put it on for we'll give them some money. We'll say 890. And then we'll set our alerts after we fill. So I'll force that. It's a little bit long delta. All right, so that filled. So we'll go in and we'll find SMH, and it's going to group it right now. So what we'll do is we're going to get out on a 25% profit target. So let's group that, and let's add an alert, trade alert, when the profit is above 25%, and this is pretty wide market. So we don't want to, again, have an alert if the markets are too wide, but these, this is many legs and it's kind of farther out. So they're pretty wide market. So paper trade, exit. So I'll know when I get this exit alert in my text or in my other notifications that it's time to exit this trade. And you can see the A and there's the exit alert. All right, Tyler, let's go on. Should we go to trade ideas? Should we go to the backtester? What do you think?
I wanted to mention one more thing in the backtester. You were going over the trade logs, and we often get a question, why does the ORATS backtest have so many trades in it? And we do this thing where we enter the trades every single day if the entry criteria have been met, and that is to reduce what we call path dependency. And path dependency refers to how the order and the timing of the trades can significantly affect a strategy's performance. So if you see in the trade log here, you can see, even though this strategy has 75 days to expiration, we're entering it one day after the next. And that's so that, over time, the returns get averaged. So if you started the strategy on, a specific day and then waited until the strategy ended to enter it again, your returns would be very biased to the starting date. So our backtester, it's really neat in the sense that it does this path dependency thing where it averages the returns and it avoids running into this problem.
Yeah, that's a good point, Tyler. We call it entry days, and entry days equal to 1, meaning you're getting in every day. You could set that to other numbers as well. And it's true because if you have one of these iron butterflies on, and then it goes out, and then the market rallies, and then you don't put one on for a while, you could get lucky the next time you put it on. But if you're doing it all the time, when I say lucky, you don't want to get lucky in a backtest. You want to have a backtest, again, reflect what you think is going to happen in the future. So good point on that one, Tyler. So we've picked a few out from the trade ideas. If you go to the backtester, we should also mention that we've added some more instructions, who we are, who should backtest, where do I backtest, a disclaimer, and we put up a new quick start. So that's great that we did that. We also have featured backtests here. It's a little different from the trade ideas in that there doesn't necessarily need to be a trade on in order for this to appear here. Is that correct, Tyler?
Right. Well, it's not scanning for trades, so it's missing that final step of the option scan. But these are just the backtests.
Right. And then, all backtests, these are the ones that are the backtests in with all of the symbols. So you could go through all of these and all different types of strategies. Here I could clear my filters and just put in 40% in the market. You could go to very, different symbols and different drop downs, and it shows how many tests are there. And now some of these names don't have what we call the enhanced trades with a lot of the entry indicators and exit indicators. In the trade ideas and the featured backtest, we're just showing the backtests that have enhancements and that also have that also fit the current environment. So if you look at the exit triggers, you'll be able to see that the environment that we're in right now. So you could again look at find similar backtests, and you could see that these entry triggers are the ones that are lighting up for today. So these are the ones that we're in right now. And then again, you could save to your favorites. So we have, I've saved quite a few here, strategies that I like. So when you find one, you could save it, and then you could even do custom backtests. And this is good as well, Tyler, because you can go in and do custom backtests that, and you could change smaller things to see, how well this particular strategy did. Again, varying these leg relationships or deltas or what have you. So this, for SMH, this would be a shorter, much wider deltas, because the deltas that we were looking at before that we put the trade on for, it was a 50-40, but now this is a 50-10. This is more kind of representative of a typical iron butterfly. And then this is shorter term. So this takes a little bit, but we're queued on that backtest, Tyler.
All right.
Orats University, we have a lot of articles and sections here. It's almost like a course. What are pitfalls of backtesting? What we've done. What are entry criteria? What are exit criteria? So you could go learn more about all these particular components of a backtest. And so you could see the exit criteria, what we test, and what, how these work, et cetera. So I think it's laid out real nicely, because, not only are we trying to find trade ideas, but we're trying to teach you about backtesting and, running your own backtest, Tyler.
Yeah, it's really a really informative selection of lessons there, with not just backtesting, but everything ORATS does on volatility research and historical data, all of which plays a big part in, best practices for backtesting.
Right. What do you want to do? Do you want to find another trade to do, or what would you like to do now?
Let's we can pull up a backtest in the option scanner, perhaps, and then just show the flow of that. So, finding a backtest in the all backtest table, and then going, from there to the option scanner.
Right. So why don't you walk me through that, Tyler?
Yeah, so we can start in the backtester and, just search for a backtest. Maybe this is something that you have an idea for that's perhaps not in the featured backtest or not in the trade ideas. You can go and, search for any symbol, any strategy. And then if you click on the backtest, and then click scan for options in the top right, it'll take you to the option scanner and automatically fill in the entry criteria for you. So the symbols, the strategies, it'll fill in the DTE and the deltas and any other parameters you have. And then you can quickly sort on the table to find the best trade.
And then you could change how you want to have them ranked, risk reward, et cetera. And then you could save this to your scans. You could say long put calendar on SPY, backtest, and you could even put the backtest number if you want. So I could save that as new, and now that's in my scans, and now I have 127 scans. And then, okay, so why don't we go check this trade out, Tyler?
Yeah, and you can do this for custom backtests as well, and it'll automatically import all the information.
All right, maybe we'll do that next. So this looks like a reasonable trade, a little bit of risk, but it's out of the money. Again, a little bit of theta. Actually, we already have this trade on, so let's. I don't want to get too confused here. So let's do what you were talking about before, Tyler. Let's go to the backtester and go to custom backtest.
Yeah, you can send a custom backtest to the option scanner. So this, if you have any idea, I mean, we have over 100 symbols that you can test here.
Well, we did this one, so why don't we take a look at it? So it already ran. It didn't do too well. So this is an interesting one. This is an iron butterfly, shorter term, with no particular timing involved. And so, this is one that you probably wouldn't do, but let's just, if you did find one that you like, then you would do the same process. You would go scan for options, right?
Right.
and then we'll just kind of walk through that flow. We're not going to do this. So this is that kind of payoff that's where there's a lot wider and less probability of profit, no exits or whatever. And of course, what you could do is go back and try to massage this, this back test. So the same one pulled up. So you could say, hey, like, what if I did something slightly different in here? What could I improve the performance of the back test and go back and forth? But of course, that's what we've done. 181 million of. We want to do as much as we could for you. So so that's one. So let's look at some of these others. Some of these others actually look pretty good.
Yeah, I can't remember when you ran those. Must have been a while ago.
November of 23. So so it looks like dates of expiration. Well, so you could go ahead and edit it there, and then I could run it again. So I could see how well it did from the time that I ran it in November to now. But why don't we do one of these trades, Tyler?
Yeah, we can do one of those if you like the performance.
Let's see which one we like the best. So
those on EEM.
Yeah, EEM. Sharp ratio is pretty low. A lot of drawdown. Not one of my favorites. That was the bottom one, I think. Again, large drawdown, not high sharp. Large drawdown, not high sharp. Don't like it. Large drawdown, not high sharp. So I don't like any of those, Tyler.
Maybe on the next show we'll run some custom back tests and then we can scan on them.
Yeah, I mean, one thing to do again is to find tests that you like and then adapt them a little bit in here. But yeah, so I think we're good here, Tyler.
All right. I mean, if you wanted to check the table filters and the all back tests, I mean, there's 37 different performance metrics that we measure that you can filter. We typically do the percent of time in market, and then we also filter on. I think we filter on margin return by default as well. But maybe in another show we can go over some of these columns and why we've included them and why they're important. I mean, you can filter by annual return, monthly return, everything like that. So
right, Sortino, Sharp. So which ones do you like better? Because some people, we've come up with a few of these best overall performance metrics where we go in and weight these and conservative winner. But again, you may have or each person might have a completely different way to look at what they're trying to accomplish with their investment objectives, which is why we put in so many different filters in here. So you could say, like I was saying before, for me, I don't want the drawdowns to be that great. So I want to go find the drawdowns and minimize those, or the reward to risk. I don't want to have that reward to risk too high the other way. So you could go and put your min maxes that you like in here. So like, for example, I don't want a drawdown of -20. So so the min that I would be willing to take is, let's say, -15, and then it goes through the table and finds all those. So those are the types of things that you want to consider for yourself, and then you could really drill down and find the best strategies out of these, Tyler.
Yeah, it's a really powerful tool. All right. Well, I think that covers it for today, Matt. I think we went over a lot of questions we usually get about the backtester and some tips and pointers on how to use it better. Custom backtester, featured backtest. There's a lot of different tabs.
Yeah, I think we have a couple of good trades on, and we're back on the winning ways on the trades, Tyler. I think I wish someone would let us know, but it must be something like 3 losers and 20 winners or something right now.
Yeah, we've been doing pretty good. I think a lot of it in credit to the trade ideas tab.
Yeah.
So if you guys have any questions, as always, you can comment in the video or post in the community tab in your dashboard, or just email us at support@orats.com. We'll see you guys again next week. And thank you, Matt and Tradier, for hosting. We'll see you soon.
Thanks, Tyler.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.